Hey everyone, welcome back to Corporate Decoder, the place where we decode the fascinating and sometimes wild world of company filings. Today we've got a filing from Scienture Holdings Incorporated that we're going to rip open and see what secrets lie within. It's a wild ride with loans and amendments and new financing. Alright, so the first thing we see is that this report is for events happening around mid-October 2025. This is a current report, meaning big things happened that they need to tell everyone about right away. Think of it like a company S breaking news bulletin. This particular report is a Form 8K. Now, if you're new here, these are like the official announcements companies have to make to the US Securities and Exchange Commission, or SEC. When something significant happens, it's their way of keeping investors in the loop about important developments. The company we're looking at is Scienture Holdings Incorporated. They are incorporated in Delaware and have a stock trading symbol that you might recognize if you follow the market, SENX, and what's registered for trading on an exchange. Their common stock is traded on the Nasdaq Stock Market LLC. So this is a publicly traded company, meaning their financial health and decisions directly impact what's happening with their stock. Now, let's dive into the meat and potatoes of this filing. One of the big items here is about a loan. It seems like Scienture Holdings had a loan with something called NVK Finance LLC. Or NVK, this loan was originally agreed upon back in September 2023 for $2 million and was set to mature in September 2025. But clearly, things changed. They entered into a second amendment to this loan agreement. What did this amendment do? Well, it pushed the maturity date back. Instead of September 2025, the loan is now due on the 8th of December 2025. So they got a little more breathing room on that debt. They also disclosed the outstanding balance as of the 30th of September 2025, which was a hefty $2,650,250. They also outlined some pretty hefty daily penalties if they pay it off late or if something goes wrong between now and when they do pay it off. We're talking about thousands of dollars per Dalton Y. That adds up fast. To get NVK to agree to this amendment, Scienture Holdings had to pay a fee. They agreed to shell out $25,000 plus any legal costs. On top of that, they had to pay another $25,000 fee just for extending the deadline. And here is an interesting part, they also issued 250,000 shares of their common stock to NVK. This means NVK now owns a chunk of Scienture Holdings, and the company agreed to help them sell these shares on the market later. So, not only did they pay cash, but they also diluted their own ownership by giving away stock. This is a common strategy when a company is a bit tight on cash but needs to satisfy a lender's demands. But the story does end there. Just a few days later, on the 14th of October 2025, Scienture Holdings took out a new loan. And this one is substantial. They entered into a note purchase agreement with Streeterville Capital LLC, who they refer to as the lender. This new loan is a senior secured promissory note with a principal amount of over $3.9 million. Now, here is the kicker. It had an original issue discount of almost $400,000. What does that mean in simple terms? It means they didn't actually receive the full $3.9 million. After fees, including paying Streeterville Capital $20,000 for their transaction costs, Scienture Holdings only received $3.5 million. So they borrowed almost $4 million but only got $3.5 million. That's like borrowing $20 with a $2 fee. So you only get 18. And where did that $3.5 million go? Right into paying off the NVK loan. So they essentially replaced one debt with another, and they ended up with less cash than they borrowed due to the discount and fees. The company says they plan to use the remaining funds for general corporate purposes like working capital, debt repayment, capital expenditures, and product development. Sounds good on paper, but it always makes you wonder why they needed this new debt so urgently. This new loan carries a 9% annual interest rate, and it's due in 7 months. That means they need to find a way to pay back this new substantial loan relatively quickly. Here is a really interesting clause. If Scienture Holdings raises any new money through fundraising or financing, including from people exercising warrants, they have to immediately use 25% of that new money to pay down this Streeterville Capital loan. This is a common feature in these types of agreements to ensure the lender gets repaid quickly if the company finds other sources of funding. And what happens if things go wrong, if there is an event of default? And these are pretty standard loan defaults like not paying on time, or if some past statement turns out to be false. the interest rate can skyrocket to 22%. On top of that, they could face additional penalties, adding 15% on major defaults and 5% on minor ones, not to exceed 25% of the amount due. That's a serious penalty. To secure this new loan, both Scienture Holdings Incorporated and its subsidiary Scienture LLC have pledged all of their assets as collateral to Streeterville Capital. This is a big deal. It means if they can't repay this loan, Streeterville Capital can take possession of pretty much everything the company owns. Scienture LLC also provided a guarantee, meaning they are personally on the hook for this debt, which is a common practice for subsidiaries. Now, looking at the exhibits, we can see the actual documents that lay all this out. Exhibit 10.1 is the second amendment to the original NVK loan. Exhibit 10.2 is the note purchase agreement with Streeterville Capital. Document 10.3 is the actual promissory note, and then 10.4 and 10.5 are the security agreements detailing the collateral. And finally, 10.6 is the guarantee from Scienture LLC. The signatory for this report is Dr. Narasimhan Mani, who holds the title of Co-Chief Executive Officer. This tells us leadership is aware and signing off on these significant financial maneuvers. So, what is the story here? Scienture Holdings is in a bit of a tough spot, it seems. They had a loan coming due, and instead of paying it off or renegotiating a more favourable deal, they ended up taking on a larger debt with a higher discount, effectively paying off one debt with another. This new debt is a significant amount for a company of their size, and it comes with strict repayment terms and the threat of massive interest rate hikes or penalties. If things go south, the fact that they had to pledge all their assets and get a subsidiary to guarantee the loan suggests they might be seen as a higher risk by lenders. The mandatory prepayment clause, requiring them to use 25% of any new capital raised to pay down this loan, really highlights how much the lender wants their money back fast and what a priority this debt is. The company says they use the money for general corporate purposes, which is standard language, but the immediate repayment of the old loan with the proceeds of the new one suggests their primary goal was simply to manage their immediate cash flow crunch around the NVK loan maturity. Whether this new financing sets them up for future success or just kicks the can down the road remains to be seen. It's a risky strategy, and investors will be watching very closely to see if they can manage this new debt and utilize the funds effectively without running into further trouble. Alright, that is our breakdown of Scienture Holdings' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.